Today, I'm going to talk to you about how I choose stocks to put in the portfolio. I am what is referred to as a value investor, which means that I believe that the value of a stock comes from being oversold or cheap relative to its overall worth. This condition typically occurs from an overreaction to a negative event in the market or simply a stock laying dormant, not getting noticed for a while. So how do I find these stocks? Well, I use a tool that's readily available to everybody. I use the Investor's Business Daily. They have a couple key metrics that I find very beneficial to drilling down into the quality of a stock. The first thing that I look at is earnings per share rating. It's called the EPS rating, and what that does is it tells me how quickly and how well this company is growing their earnings per share year over year as it relates to their peers and competitors. The EPS rating is broken down from 1 to 99, and it tells you exactly where they stand relative to the rest of the stock market. So when looking at stocks to invest in, I focus in on stocks that have between a 90 and a 100% EPS rating, which means that they're growing their earnings per share year over year in the 90th percentile of all the companies in the market. So great, I found a company that's been growing their earnings. The next thing I want to take a look at is what quality those earnings are. I also use an IBD, Investor's Business Daily metric, called the SMR. The SMR stands for sales, margins, and return on equity. What this tells me is how strong the earnings that are being grown year over year are and how likely they are to repeat. So, I found two stocks, or I found a stock that has met two metrics. They've got great earnings per share growth, and they have excellent profitability and SMR rating. So now I want to take a look at something that truly grows stocks from 0 to 100 quickly, and that's the institutional participation. In the stock market, an institution is a mutual fund, a pension fund, or a hedge fund. Those are the big boys. Those are the ones that can move the rock quicker than anybody else. Individual investors like you and I, even though I manage quite a bit of money, I don't have any power to move markets in major stocks. Companies like Fidelity and Vanguard, they're 800-pound gorillas, and they're the ones that will move the stock market. So once we determine a quality company in terms of earnings per share and SMR rating, we want to see how many institutions have owned the stock or still own the stock. You can go to a variety of different sources and find out what the institutional participation is. I look for institutional participation between 30 and 70%. To put things into perspective, stocks like Apple, Amazon, and Microsoft all have 99% institutional participation. This means that 99% of their shares outstanding are owned by institutions. Now, that doesn't mean that I don't want to invest in those companies, because those are all strong companies. It just means that you're much less likely to see exponential growth in the short term in those companies. So we look for companies that have between 30 and 70% institutional participation. What that means is that 30 to 70% of the institutions have recognized the value that we've uncovered and have invested in the stock. Why this is important is because mutual funds copy each other. Once a fund manager uncovers a good stock and starts having success, the other fund managers say, hey, look at this guy, we're going to do what he's doing, and they all jump on the bandwagon. And that's where you get the exponential J-curve or hockey stick reaction that will take a stock from 50 to 150 in less than 12 months. Those institutions will move the market quickly, so you want to get in ahead of them so that you can ride that wave all the way up to the top. Now, one might think, why are you only looking for 30% institutional participation? Well, I've learned over the past that investing in stocks with less than that means that they're still too much in the infancy to get noticed by the big institutions, and that money may sit dead for 2 or 3 years before they start getting noticed. 30 to 50% means that there's enough institutional participations where the other ones are going to sit up and take notice in the shorter term and drive that stock up. Now, that being said, it may not happen instantaneously, and it may take 2 or 3 years for that stock to go from 50 to 150. But like anything, patience is extremely important in investing. And knowing the reasons you're investing in a stock will give you confidence to wait it out and see where it's going to take you. So, okay, we've determined the metrics. We've got great earnings per share rating, we have great SMR rating, and very minimal institutional participation, right in the sweet spot between 30 and 70%. So now what do we look at? Well, business model is important. What type of business are they in? And how likely is it that they're not going to face any competition or face a major downturn? So I take a good hard look at the business model for the companies. I look at three things in particular. One, barrier to entry. How difficult is it for other companies to get in and compete against them? If there's not a lot of competition and there's a huge barrier to entry, that's a plus in the company's column. I also look at unique business proposition or what they do that no one else can do. So a good example is a Twitter. Now, a few years ago, Twitter was not performing very well, but it had a unique business proposition. So, that was a company that I took a look at, and we made some money in that stock simply because it was a very unique business proposition that had a very high barrier to entry. And then the last thing we look at is the best in breed. It's important that the company is one of the best in the business at what they do. So if you're looking at a company that is just a vanilla company in its industry and not really, putting up any records or getting noticed for their quality, then it's a company that I may not invest in simply because I'm looking for somebody that's head and shoulders above the rest, that will also drive and maintain those earnings per share and SMR metrics that we initially found and uncovered. So, once we check all those boxes, what do we do next? Well, I've got a company that's growing, it's looking good, they've got a good business model, but I want to know what's going on today or this year. So every quarter, public companies have earnings calls. So what I do is I go in and I get the transcripts from the last 2 quarters earnings calls and I read them, because those type of documents will give you insights that nothing else will. Usually it's the CEO and the CFO talking about the company, and they'll talk about what's working, what's not working, the unique projects, where they feel like they can beat the competition. And although they put a little positive spin on it, they are rather candid, because the last thing they want to do is say something in their earnings calls that's going to be false advertising and make them lose credibility in the future. In addition to what the company directors have to say, there's a question and answer session by analysts. And that will give you a little bit of an indication as to what the analysts think about certain aspects of the company. And they'll often drill down into things that the CEOs and CFOs didn't initially touch on in the earnings calls. And that too will give you an insight as to what they think about the prospects for growth inside the company. So, once we find all these things and we determine that we want to invest in a stock, we figure out where the market is in total, whether we're in a major bull market, at the top of a bull market like we were at the beginning of 2020, at the bottom of a market like we were in the middle of March of 2020, or somewhere in between. And then we will allocate a portion of that stock to everybody's portfolio based on their risk tolerance. Allocation to a portfolio is something that I'll cover in a subsequent video in the next couple weeks. I just today wanted to let you know the methodology that we use in choosing stocks, the philosophies I have, the tools that we use, and everything that goes into the stocks to get put in the portfolio, so that when you're thinking about how things are done, you have a little bit more insight than just reading a document. Thank you.